I want to say this first. I think Josh should probably take this clip and put it right in the front of the video.
Welcome into the first episode of the Potato Finance Podcast with my good friend Nick Wright. Nick, how we doing here?
I'm doing well now that I'm here with you, dude.
Yeah, dude, that's a good thing to say. Good thing to say, absolutely. So let's just get right into it here. So Nick, we've known each other a little while here, but why don't you just tell everyone what your story is, kind of how you got to where you are today, your whole journey, everything like that.
Yeah, so I started... the last decade of my life, I've been basically doing YouTube for a living and everything outside of YouTube that attaches to it. So social media businesses, e-commerce businesses, sponsors, the whole 9 yards has been my livelihood for the last decade plus. I recently just stepped away from it. And throughout those years of doing YouTube, I actually met you because we went to the same school, but he was grades below me, so I don't think we ever interacted or saw each other, right?
No, I was actually out of high school before you even got in.
That's what I thought.
Yeah.
That's what I thought. And then, yeah, I think right after I graduated, you became a freshman.
Yeah, I think you're right.
Yeah, and then, but then you ended up watching my channel, right?
I did. I found you along the way. I remember, because you were actually the reason I really got into lifting.
That's kind of crazy.
Yeah, I remember, I don't know, someone told me, it might have been Henry Cunningham. I don't know if that name sounds familiar.
I remember Henry.
And
wow.
he might have brought it up to me like a while ago. He said something about you, and I'm like...
That makes sense.
And somehow you came across my mind like, oh, he's on YouTube. So I'm like, all right, let me check it out. And for some reason, I just kept watching him. I don't know why, but I just kept watching him.
And then, yeah, so he met me and we took a picture together at the gym.
I do.
But then that transformed it. We ended up going to the same gyms, following each other to different gyms. And then, so it ended up turning into an actual friendship over time. And then asking me for pictures turned into you trolling the hell out of me.
I did that
well. Oh my God. But it was all funniness. But yeah, so it became a really sarcastic and long-lasting friendship. And then lo and behold, now both of us are heavy into finances and heavy into the stock market and stuff. So
yeah,
now you started up this. I want to say you have one of the coolest channels, I think.
Really? Why do you say that?
Because it's rare to find a channel that can break down individual stocks to buy and then give full due diligence on them and do it thoroughly and articulate it in a really objective way. There's a couple of them out there, but they're not the most common thing in the world. And you don't just focus on the hype stocks or the popular names either. I mean, you've brought some really cool stocks to the table that I had kind of overlooked or didn't care to dig into at all. And after watching your videos on them, I've been like, oh, maybe I should grab some of that.
Yeah.
Or decide not to grab it, depending on your analysis.
Yeah, it's tough. I feel like most of the videos I make, I actually don't buy those stocks, to be perfectly honest, because I'm just so picky. I really, really, really need to break down. I'm really all right, is this the best place for my money?
Mm-hmm.
Is there any better place for my money? And a lot of times, I do like a lot of those stocks. I'll be like, all right, I really like this. I think this is a good buy. It's a good price point. But I'm like, do I like it better than this one I already own? Do I like it better than that one that's really attractive? It's just so much that goes into it. I've
noticed that in your videos because you'll give this huge breakdown on saying how amazing the stock is.
Yeah.
And at the very end of it, you're like, but I'm not buying it though because of this, this, and this.
Yeah.
But it's that's a really cool, thorough breakdown. You'll have me ready to buy it and then suddenly change my mind and all that. And then I'm a big TA guy. So your fundamentals mixed with looking at the charts, I think it's super awesome for investment sake. Also, I don't know if I'm talking. This is my podcast, but I don't those of us who are local. Those of you who are local to Rhode Island who know us personally on the gym scene may not expect this because Josh is just a sarcastic potato all the time. But we don't have to get into numbers, but he's done really, really well with his investment portfolio. You've built up a really big investment for being so young too. You've built up a really big investment portfolio.
Yeah, it's kind of crazy to think about. It doesn't seem that big to me, but it all just kind of started I just picked up a book about trading. I started trading for a little bit, hated it. I hated it so much. I did not like it. We'll get into that in a bit. Yeah. But I just kept reading books and I, started index fund investing. And I'm like, you know what? I think I can make better money picking individual stocks. And I just started, reading a lot of common annual reports like Amazon, Apple, getting used to business models, Walmart. And I just kept picking and picking. And I always knew I'm a dollar saved, a dollar invested. You just know it's going to add up over time. Just basic compound interest. And here we are today.
That's another cool thing about you. I think that's somewhat unique is for a non-trader, for a strictly investor, you tend to stick with just individual stocks, like you said, which I think that's cool because there's a lot of growth to be had that way. But it's not the norm. Normally for just people who want to just stay kind of conservative and invest, it's ETFs.
Right.
Even me, I have both. I do individual and ETFs. I love ETFs.
Right.
But there is a lot of growth to be had with individual stocks if you really pick out the right ones.
The thing is, exactly, that's the problem. You got to pick out the right ones. And I think the biggest problem with that, and the reason I tell people don't pick individual stocks, is because people don't want to put in the work.
Right.
Like, I had a friend today ask me, he's like, should I buy AMC today or tomorrow? I'm like, don't buy it at all. Like, legitimately don't buy it at all. Like, obviously do what you want. It's your money. But I'm like, don't buy it. It's like clearly overvalued. But that's the thing. They don't look into the fundamentals. They don't read the 10Ks, the 10Qs. They're just like, what's the next Dogecoin?
Yeah, and,
like,
and just to touch on that quickly, AMC, you're just making an example, but AMC is a weird type of beast anyway. So, like, it's heavily overvalued. The reason it's up so much is because of the short squeeze that's waiting to happen right now. So, yeah, if you're not familiar with trading, I think you should stay away from it. It's high risk, potentially high reward. I'm actually getting AMC a little bit. I'm an ape, but I didn't go full dumb with it. I didn't put my whole life savings into it, but I got in at like $9, and I actually been adding a little bit more there. But I agree with you fully. Like, that's the only thing I've been in, and it's only with like if I lost all that and went to zero tomorrow, I'd be okay.
Right.
I'm not gonna cry or lose my stuff. So I'm with you. I just wanted to sidetrack because I'm sure right now people are gonna watch this that are also in AMC, and they're like, "What the hell? You guys don't know what you're talking about." I think there's a squeeze to be had, but you're dealing with uncharted territory. So if you're brand new or you cannot afford to lose any money, definitely stay away from a stock like that. 100%.
Yeah, I would definitely agree with that. If you're like just kind of like a spec play, throwing money in there, like absolutely go for it, because if you bought it at like $5, you made a good amount of money per se.
Yeah.
But the thing is, like, when you see like, you know, the company selling off 11 million shares, that's usually not a good sign for. Means like the company itself usually thinks it's overvalued, so they're taking their
You're
profits.
fighting against the big boys here for sure. So I mean, it seems like things are actually shifting, which is first time really, but like there's a lot of risk here. There's a lot of reward, there's a lot of risk. So I think that's really well said. If you don't know what you're doing with trading, if you don't even know how to like look at levels, or you need that money, or you're unsure, just don't do it. And I'm saying this as someone who's in it. Just there's no point.
I agree completely.
Value your money.
Yeah. Let's go back a little bit to your story here. So, why YouTube? What made you start getting into YouTube? Like, how did that even come on your radar? Because 10 years ago, it's not what it was today.
No, it wasn't.
Absolutely not.
No, it wasn't at all. So, it actually started because I just wanted to be able to upload videos to Body Space, which at the time was like the MySpace of fitness. It was on bodybuilding.com. It was literally like a Facebook for bodybuilding and stuff like that.
Is that still around?
I don't think so.
I was going to say, I've never heard anyone but you bring it up ever.
Yeah, it's old school. I don't think so. I mean, it was during the time of MySpace, I think. But so at the time, like, the only way to get a video on there, because I don't think you could just do it, like, directly to the site. I think the only way to do it was through, like, YouTube. And at the time, like, I barely even knew what YouTube was. I was like, it was just, like, some site that you could upload videos on. This is, like, 07. I was like, I'm in, like, young high school.
Right.
So I filmed these little, like, posing update videos, like, leading up to, like, my first shows or whatever, throw it up there, and then just forget about it. But then eventually down the line, I looked at this was like in 2009 when I was like my senior year of high school. I looked at YouTube and I was like, wow, I've accumulated a decent amount of views and subscribers on this. I don't remember what it was. It wasn't anything like viral, but for not caring about it, I was like, wow. And I was like, there might be something here. And then I've always loved public speaking. I've always loved sales, interacting. And I thought I had a cool way of breaking things down verbally. So I was just like, let me try running with this. My goal at the time was to become the most well-known, natural teen bodybuilder, because they didn't really have a platform back then. Back then, the only platforms you had were magazines or bodybuilding.com featuring you. You couldn't make your own.
Now, what kind of back then, how big did you have to be to like be in like a magazine or anything like that? Did you have to be huge, or was it like a little bit more common?
Ooh, that's an interesting question. You either had to have a really, really good physique and just get some notoriety, momentum going in that area of like modeling and like stuff like that. Like if you were winning Mr. Olympia shows, you get in a magazine. You either had to be that, or in my case, I saw an opening here. I was like, the physiques are there, but like the traffic generating traffic isn't really there. So I was like, if I can get my YouTube up, basically I realized fame would be my number one claim to success. If you get famous, things open up for you. So for me, like you had to be somewhat. You either had to have a crazy physique or you had to start getting views. And back then, the views that I had that got me known wouldn't have done anything for me today. Right. But back then, it's like view inflation. Back then, the views I had went a long way.
Right. Yeah, I've seen a couple of people that have said like back then, like 30,000 subscribers was like equivalent to like 300,000.
Yes.
Like insane.
I quit my day job. I quit my 9-to-5 job, which is cushy at I was salary, benefits, the whole 9 yards. I quit it to pursue NWB and YouTube. And I did that with 33,000 subscribers.
That's insane.
And that's when Max,
like unheard of today.
That's when Max Tuning found me, and he was like a fan of mine too. Kind of met the same sort of way. He was like a fan of the channel, And he was like, "Oh, 33,000 subscribers. That's insane."
That's awesome. I actually really want to have him on here eventually. That'd be like really awesome. Like
that'd be
I
cool.
plan on emailing him like pretty soon to see if he'd be down for it. But
that'd be really
cool.
that'd
be cool to have him on here. It'd actually be cool to have both of you on here sometime. That'd be really cool. Kind of break down his YOLO Robinhood portfolio.
Yeah.
And YOLO Dogecoin.
Yep.
But so how did you get into kind of like the stock market and investing in general, kind of getting back to the investing side of things? Because I feel like a lot of people, they know it's important. They're like, I should invest money. They know, the dollar goes down over time. But a lot of people don't get started for whatever reason. Maybe they had a bad experience, like they got in 2008 and everything crashed. Or there's some underlying reason why they don't get in. So how did you ultimately kind of get into it and start dabbling into it?
I'd always been attracted to the stock market for some reason. I don't know why. There was something I thought was always cool about being able to kind of pave your own way and make your own money out of seemingly thin air. Like, I came from obviously working a bunch of jobs since I was 14 years old, from washing dishes to construction to name it, I've done it. So, and then even when I started pursuing YouTube and my own business, there's still like, that's a step up from 9-to-5 jobs, but there's still like, you have to fork out money to buy inventory for stuff. You have to pay for a site. You have to pay for shipping and all that. Like, there's still like, you have to, and then you have to continue keeping your notoriety relevant in order to keep the sales relevant. So there's still like that weird thing where you have to put a lot. It takes a lot to make a lot.
Right.
The stock market was interesting to me because it was like this one area where it's like you didn't have to like get a warehouse. You didn't have to buy inventory. You didn't have to make sure you had inventory on hand. You didn't have to get shelving and like packages to ship things in. And you definitely didn't have to clock in and work 8 hours a day and break your back. Sure. So there's something really cool about that. You still have to put in work. You still have to learn the skill, of course. It takes a lot of time and a lot of mental work. I mean, mentally, it's one of the most draining things to learn it. But there's something that always attracted me about that. So my dad would always tell me about stocks and stuff. He was always very conservative, of course, but he'd always get that in my head when I was young. And then around 16 years old, I think when the Pokemon stock blew up, the Nintendo stock.
Oh, dude.
Yeah, when Nintendo blew up, I was like, oh, let me open like an account and try to trade that. And of course, it didn't go well at all. I jumped in late, like everyone does when they don't know what they're doing.
Like with AMC.
AMC, I was in at 9.
Oh, dude, you're looking pretty now.
I got call options at like 9 too.
Oh, dude, we're looking really pretty.
I just cashed. Actually, I just closed the call options.
You can sponsor this podcast. Actually,
I sure
sponsored
could.
by Nick Wright.
I sure could. The hell was I just saying? Oh yeah, so then I had a friend who was into penny stocks, right? Which in my opinion is a lot like gambling. Unless,
I agree.
Unless you're really into it, there's some people that can pull it off.
That I feel like has to be like strictly like kind of TA stuff. Like I feel like unless you like have some sort of like inside information, you've like tracked the company for a long time. I feel like those are like so dangerous.
Yeah, that's what I think. I only know of like 2 people that can do it consistently. I can't. Right. I don't do it. I stay away from it. But I got into it a little bit, and he fed me this friend of mine fed me some plays, and like made a little bit of money on it. Got greedy, tried to do it myself, totally tanked it. This was like in 2016, and then I just quit altogether, the stock market altogether. I think I was holding like a little bit of crypto, a little bit of like some stupid stocks. I didn't even know what I was holding. And then I think I probably cashed it all out by like 2017, and then just kind of like disappeared from it. And then in 2020 is actually when I really got back into it seriously. Like 2020, I think Tesla kind of again caught my attention.
Dude, that's my biggest blunder ever. I don't think I've ever said that. So I actually owned a lot of Tesla. Like I left, and I sold it for a short-term gain, which is why I take it so seriously now, because sometimes the stock might go up a lot, but the thing is like it still has a lot of room to run. So I left well over like 6 figures on the table.
Oh yeah.
I'm glad because now I have a lot of stocks I think are going to make me a lot more than that. So I'm like actually happy I learned that lesson. It was an expensive lesson, but I learned it.
Yeah. I think Tesla's like 4X days are long over now.
I actually think it has potential to 4X again because I don't even think it's hit its stride yet.
Interesting. I don't know. Like I'm interested to see. I think it has room to grow. Don't get me wrong. I think it's going to be a $1,000+ stock. But maybe it went up from 400. If we didn't count the split, it went up from $400 to $4,500 in the course of a year, and then now it's like what is next that's going to make it really like 4X like that?
Well, here's the thing that I'm thinking, right? So it's kind of like I think you're right in the aspect. I think it could be a dead money stock for the next couple of years because it's run so much. But if you look at the valuation, Tesla didn't do anything for like 6 years. So did Tesla really make that much progress in like 6 months? No, it's just that it was heavily shorted and they just had to fill in that valuation for all that time. So I personally think, gas-powered vehicles, like new ICE vehicles, they're going to be a thing of the past within like 20 years.
Yeah, I think so too.
So I think if you're looking at it from like a strictly long-term perspective, like Tesla's going to be the number one player. Because like now, like car companies are like, oh shoot, they might be onto something here. Like they're just starting to get up and running.
That's what I'm curious about too, because it's already started. So Tesla kind of, basically China tried to make EV a thing for a decade and failed, and then Tesla came in and finally made it happen for them. And then they got it started significantly here in the U.S., even though we're way behind.
Right.
And so they really cornerstoned EV, and like they're really like revolutionary with it. And now they have talks of moving into India, which is like the 5th largest EV consumer, and they're like untapped territories, which is huge. But then at the same token, we also have like a lot of competition sparking up now. Like VW just surpassed Tesla in sales over in Europe, and now Tesla sales in China have been cut in half recently. And some of that could just be from the chip shortage. I know they let go some guy at Tesla because of that. So there's a lot of moving parts there. I'm just wondering, like, you have Ford now coming back with their electric vehicles. So I'm wondering now if other vehicles that have already been landmarked start stepping in and start creating competition, and they're at a lower price point with more potential upside. I wonder if that'll start shaking some attention over from Tesla. I'm strong in Tesla, for the record. I want to state, for the record, I'm still holding Tesla in 2 accounts, my main account and then my Roth IRA. I love Tesla, and I think it is not done growing yet. I'm just wondering if we're going to see crazy, like, 4x life-changing growth anymore.
I think over the period of so many years, I don't think you're going to see it, like, in 6 months, but I think over 10 years.
Like an Amazon?
Yeah, like slow growth. It's like, I think it could definitely like 4x over the next like 10, 20 years or so. But it's a long-term play. It's not going to be like, I think most people are thinking like, oh, it's just going to do it again, like, you know, next year. It's like, I don't think that's going to happen at all.
So yeah, that's fair to say. I think if you're giving it a lot of time like that, then yeah, we could probably see something big.
Plus, at the end of the day, it's like Elon Musk is like just built different. Like, like he's literally like the Tom Brady of like this industry. It's like insane. Like I read a book on him. He's like just built different. Like I mean, like he's. Some of the stories I could tell you, like he like got married, got divorced, got married to the same girl again, got divorced again. Like he was like, I think it's because he was abused as a child. I really think
was he?
He was very abused as a child. I think that's kind of the reason he is. But he like can't have like a regular family lifestyle because he'll like, you know, get up at 6, go to work. Like he takes planes back and forth like sometimes. But then he gets home at like 11. He just gets on the computer and works more.
Crazy,
so it's like insane. Like I'm just like, do you ever die? Like, you know, like, do you ever just like turn off? Like, I don't understand.
Right. Yeah.
Like, he's like the definition of like find a way.
Yep.
But I also read he does this crazy thing, right? He'll say he has a project that's supposed to take 2 years. What he'll do is he'll tell his employees, he's like, I want it done in 6 months. And he'll like, it's like, obviously that's not mathematically possible.
Right.
So they're just like, well, we can't do it. Like, you know, I don't know what you want from us. And he's like, do it. So he just like says that. And do they get it done in 6 months? No. But he's like constantly like vigorously yelling at them to get it done in 6 months. And what happens is a lot of the times they'll get it done, say, in a year. So they cut it in half by 50% because he does that. So is it the best strategy for your employees? Probably not. But at the same time, it is more effective and more efficient. It does get a lot more done. Sure, but it's like crazy to think that he does this stuff because I'm just like, after a while, I'd be like, dude, go to hell. Like, I'm just going to walk away. Like, you know, like it's insane.
Yep. Yeah, I'm definitely still bullish on Tesla overall, for sure.
But back to trading here. So how did you I know you talked about a little bit how you got into it, but how did you get back into it?
Okay, yeah. So 2020, Tesla kind of caught my attention again, right? Mm-hmm. So what I did is I actually started getting into just investing, not even trading. And I started building up a dividend portfolio was like my main goal here. Mm-hmm. And so I started building it up, and of course I caught the end of that bull run, so everything was just going up and up and up, right? And then the COVID crash happened, and then like most idiots, I didn't panic sell because it was going down. I understand, like, you just hold while it's red and it'll go green eventually.
Right.
But I was arrogant. I was like, you know what? I'm going to sell right now at, like, some of it was even, some of it was a partial loss, some of it was
I remember you doing that. I'm like, dude, don't do it.
In my head, I was like, I'm going to sell. I'm going to use this money to trade in the meantime. You can trade short, trade long, and I'm going to build that money up triple, and then I'm going to reinvest at the bottom. In my mind, I was like, that's what, and then anybody who's dealt with trading knows you don't time the market. You can't catch
beautiful plan. Doesn't work out that way, though.
Doesn't work out like that. So what I did is I just basically cashed everything out, like a lot of people did. Great mistake. I learned from it. Tried trading, and then I realized everyone usually starts trading like they'll buy Tesla. Tesla goes up because it's a bull market, and then they sell, and they're like, oh my God, I made money off Tesla. This trading thing's easy. I could make a living off this. And they don't realize it's not easy. And they also don't realize if you don't know what you're doing with TA, technical analysis, like if you don't know how to read charts and really understand them, you're gambling. Like I always say, people that think trading is gambling don't understand what trading actually is. They're not educated on it. And then, people that are trading are not gambling.
Right.
So I started getting into trading and really digging deeper and learning like the ins and outs of it. And I had some help from some really cool people, but I really just loaded myself up with YouTube video after YouTube video after YouTube video about pattern breakouts, continuation patterns, level of support, resistance, obviously all the indicators, and just started studying that. So I tried trading. Like everybody, I destroyed my account. I had 2 different accounts. Like I destroyed both of them. Got them down to like nothing. Like every trader does. Trade too big. You trade with your emotions. You chase losses. All the common mistakes. And then I went to paper trading for like 6 months.
I was just about to ask you about that.
Mm-hmm. I highly recommend paper trading. For those that don't know, it's on almost every single platform. It's on Webull. It's on Thinkorswim. And it's just simulated money. So you trade real time with the real stock market, and you're trading real stocks as they move in real life, but you're just using fake money, like monopoly money. So you don't actually lose anything if you lose. And that's a great way. And trading with real money first was actually the best thing for me. Because I think if I had started paper trading, I would have been like, oh, $10,000 on this trade. Cool, I made $100,000. Awesome.
Yeah.
Real money allowed me to understand like realistic trade sizings. So when I went into paper trading, even though I had like 200,000 fake dollars, I would use very small, realistic trade sizes that I could afford with real life.
Right.
And that was the coolest thing. So even though it was paper money, I would start feeling like the heartbeat and the intensity kick in during small trades, even though it was small and it was fake money, because I was using what I would realistically use.
Right.
And that was a phenomenal way of training myself.
Now, do you have, because I read a book, How to Be a Full-Time Day Trader, a long time ago, and he talked about in that book, he recommended that you never use more than 2% of your portfolio. Mm-hmm. Do you have a certain percentage you use, or do you kind of go off a feel, or do you have like a max you put in, or like a minimum, or?
Yeah, so I do mostly, I know that 2% rule. I do mostly options, so which are definitely riskier. Definitely, if you want to get into options, paper trade first. But again, if you know TA and you have a plan for every single trade, then trading options should be about the same as trading regular shares.
Right.
As long as you understand options, as long as you buy yourself enough time before expiration, you know the trade's going to pan out in that time, and you're not over trading. So with options, the beauty is you can trade even smaller than that. So I don't even necessarily, I think the percentage would be like sometimes less than 2%, just because you can, it depends on what the trade is, but you can go really small with options,
right,
and make them stretch a very long way. Like just this week I had, this is not an everyday trade. This is kind of cool, but I had a few different option contracts open. And I flipped a $46 call option into $2,200.
Wow, that's pretty solid.
Yeah, it's like almost like a 5,000% gain.
Yeah, right.
And of course, like not everything runs like that. That's like rare when you catch something like that. But like you wouldn't have that same percentage growth in just shares if you bought shares. And if you did, you'd have to buy a lot more shares.
Right.
But I do make it a point. It's very important you trade small enough to where you're not going to destroy your account.
Right. I think that's so important because sometimes you see people like they had a 50% loss, so they go from like $100,000 to like $50,000.
Yes.
Well, you need 100% gain just to get back to where you were.
Yes.
Never mind, like to get more than that. Like, but you need to get 100% like back. But I'm glad you brought up that short-term options trade because I actually really want to ask you, and I'm really interested to hear what you have to say about this. How does that work with your taxes? Because that short-term capital gains would kill me. And for those that don't know, so there's short-term capital gains and there's long-term capital gains. When you hold an asset for less than a year, you pay your normal tax rate.
Right.
But when you pay long-term capital gains, when you hold it more than a year, you're taxed at a different rate. So that could be the difference between short-term paying, say, 35% or long-term paying like 20%, just for an example. I'm not sure what the numbers work out to off the top of my head. It depends on like your income and how much you made and things like that. But how does that work with your taxes? Because I'd be like, I don't know, you need a good accountant for that, I feel like.
Yeah. Well, I do have a good accountant, unfortunately. So one first thing is keep in mind, I'm only just over a year into this now for trading full-time. Full-time. So, I'm not making millions off this thing yet, hopefully soon. But what I've been doing, what I did this year, which was helpful, is I was able to kind of tie it all into my current business that I have. Because I have NWB was still up and running, and that's a whole business. So I can write off everything with that. Now, with trading, they're going to see it, obviously. If it comes from trading, they're not going to be able to take, the expenses of whatever expenses you have for your NWB business,
Right.
Clothing line inventory, like inventory that I bought, that's an expense. They're not going to be able to take that and write it off towards your losses or towards your wins on trading, obviously, because
Right.
they're two separate things. But in this case, it just worked out to where I was able to write off so much from my NWB income that it just kind of helped offset whatever I was going to get taxed for on trading. And because I knew it wasn't astronomical anyway, so it actually evened out kind of nice. What I'm going to do moving forward, though, and what the best thing to do is create an LLC specifically for your trading. Then you can write off every expense that you use. Like you can write off your office expense and electricity expense, everything directly into your trade.
That's a good idea.
So
Very good idea.
Right now, I am writing off my office, and I am writing off all of that. And that gets interesting, too, because then it's like, well, do you give up one or the other? But now that I'm done with the NWB stuff, it's going to make sense to switch over to trading.
Right.
So, this year, I was able to write off, all my office expenses. I bought a stapler. I can write that off. I can write off everything. And that goes into the income I got from NWB.
Right.
Which is my largest income, obviously, being newer to trading. And that helped me offset that a lot. So my NWB income shrunk down on paper. And then whatever I got from trading, it wasn't that huge of a hit since we took some of the blow away from the NWB income.
Right.
So now what I want to move forward is you get an LLC for trading. Now trading is your business. Now you can directly write off everything, computer, your office expense, electricity expense. You can write that directly off to your trading, to your actual trade income.
I think that's so important what he just said right there. I think that's actually probably, if you're like starting any sort of business or side hustle, that's like astronomically important, because if you don't know that, then you're gonna have a hard time making it, because taxes are gonna take so much of your revenue.
Yeah.
Like it's like insane how much, like you guys don't even understand how important this is. Like what he just said. I might even play that a second time. That was so important. Like start an LLC, like all those things. Like that was very, very important. So let's kind of switch gears a little bit here. Let's talk about real estate. Mm-hmm. How do you feel about real estate? Do you want to build out a real estate portfolio? Like, where do you want to go with real estate eventually?
So I think in general, real estate is amazing. I mean, that's where the money is. That if you do it correctly,
right?
If you do it correctly, people are under the misconception that you can just buy any and everything and like that's it. If you do it correctly, that's where the money is. And I mean, it can be great money. It can be a great hedge economically against a lot of things too. But for me personally, I don't have any desire to get into it super heavily, at least right now. I did buy my first property when I was 25, and I bought it with the intent to rent it out. And when you buy a rental property, you have to put at least 20% down. Right. My thing is I wanted to pay as little as possible and have the tenants pay for it. So I bought it with the intent to live in it, and my plan was to live in it for a couple of years and then move out and rent it out. So I put almost nothing down, and the plan was to let the tenants rent it out. But fast forward like 5 years in now, I kind of fell in love with the place, and I got tired of moving. After you rent place.
Moving sucks.
So I was like, I'm going to stay here for a while. I'm in love with where I live. I love the condo. And so, yeah, I just decided to park it there for a while. Eventually, I will move out somewhere, and I eventually will rent it out. But I don't have a huge urge. The other thing is, too, I'm a huge fan of putting all your focus into becoming as perfect as you can become in one thing at a time.
Right.
So right now, for me, that's trading. I want to really master trading and make that my thing. And that's the thing I enjoy, too. It's not just for money. I enjoy the technical analysis aspect of it. It's like putting together a puzzle for me. I love it. So right now, that's where my focus is. Maybe down the line I'll get into real estate. I have some skin in the game with one place at least, which I'm happy about.
At least you have like a general idea of the process.
Exactly. That's the other thing too. The process is like, it's more expensive to get into real estate, and it's a process. Like, it's not the biggest deal in the world, but like, you go through like a Bible worth of paperwork, and you go through meeting after meeting after meeting, and escrow and underwriting. It's like a pain in the ass.
This is why I tell people to get involved in the stock market first, because I know there's ways around it. Like you can do like different tactics, different strategies where you don't have to put as much down, but it's still a process to go through all that paperwork, as opposed to like the stock market. It's like, let me open up my Robinhood account and just start investing right away. So I think that's one big thing that plays into it, that I really try to push people away from real estate for that reason. And plus, I feel like a lot of people just aren't ready. for like that type of commitment. Because when I say, all right, you want to invest in real estate, like, do you understand the work that comes with it? Are you going to rent it out? Like, is it just going to be a placeholder, a place to park your money? Are you going to get a property manager? There's like so many things that go into it that I don't think people actually understand when they first get involved in it.
The maintenance is insane. There's been moments, fortunately I've had it pretty easy, but there's been moments where something will go wrong and I'll be like, I hate being a homeowner.
Dude, that's my biggest thing. That's why I really want to kind of put off buying a house as long as possible. One, because I don't really think I want to stay in Rhode Island. But second of all, it's like, if something breaks, I just call the guy upstairs and he comes and fixes it. Like,
hey, that's a beautiful thing. Yeah. That's a beautiful thing.
Yeah.
I don't think there's anything wrong with renting. You're buying yourself time to make a good decision. You're buying yourself time to save up more money too.
Right.
I don't think there's anything wrong, especially right now. You don't want to really buy a house right now.
Right.
Everything's expensive, so.
Yeah, this market is definitely a little bit insane. That's for sure. Like,
very insane.
It's like, I've seen some people say like, yeah, the house was like, the listing price was $350. We put in $400. We didn't get it. I'm like, you put in $50,000 over asking price and you didn't get it. Like, that's like how insane it is. I'm just like I was talking to one of my friends. He said he bought a house like last year before the market really started going crazy. He's already up like $100,000 on it. Dude, it's like insane. Like,
I don't even know. I'm up like a crazy percent, like 50% or something stupid.
That's
like
insane.
That.
Did you even buy it that long ago?
Yeah, I didn't even check. But last time I checked, it was up 30%. I'm just assuming it got higher. I don't know.
Right.
It was nuts. I checked before this housing spike. So
right. Yeah.
Crazy, man. Absolutely crazy.
But I also tell people that maybe hold off on real estate and move towards stocks. Because I feel like when you get involved in both, you become a little bit too diversified. And diversification is obviously important. But at the same time, I feel like if you're too diversified, you're really limiting your returns. Like I see people that build out portfolios. They're like, what do you think of like this stock, this stock, this stock? And they'll list off like 20 stocks. And I'm just like, why don't you just buy an index fund?
Yeah.
Like, you know, like there's no way you can have a real conversation with me right now and convince me that you like stock number 20 in your portfolio as much as you like stock number 1.
I like that point. That's a good point. And that's something I've more recently, I think we texted about this, I've recently switched on to is diversification. Unless you have like a 7-figure account, diversification, I think it leaves you missing out on a lot of growth.
Right.
Like, because I started off trying to diversify. It's all you hear, diversify. Buy something in this area, this sector. But then it's like, they grow a little bit here, a little bit there, a little bit there. Whereas if you just kind of consolidate all of it into like one sector, but it's something that you believe in that's going to give you good growth, you can skyrocket your money. So I recently in my main, actually Ariana and my joint account, we had, I don't know, 15, 20 different equities. We now have 4, I think.
I think
3
that's
or 4.
smart. Like, I think that's definitely smart. Obviously, like you said, like once you get into like the millions, you just need to like buy more companies, more stocks, you need to diversify more. But it's like, I see people that have like 10 grand and they own 30 stocks. I'm like, dude, what are you doing? Just literally just buy an index fund. Like that's literally like the best place to do it.
And I think that's a great idea too. Like if you don't know what you're doing and you don't know what the hell to buy, this is not financial advice. I'm not a financial advisor, but I love, like if I'm doing a lazy investment, just something I don't care about and I just want to grow over the years, like VU and like the SPY and just like those big index funds that grow with the S&P 500, they're going to grow every year. They pay dividends. You're not going to get like AMC, Tesla moon money, but you will open your account years down the line and you're going to be up nicely.
Yeah, absolutely. That's kind of like, that's where I like to park my money, where I really don't feel like if I don't have a better place to park it, like kind of like by default. Because I put a ton of money really into the market like the last 8 months. So I'm like, all right, I think I've gotten just about everything built out that I want to get built out. So I'm like, let me build up some cash levels. And if I don't see anything, which I'm actually really interested in Coinbase right now. That's what I'm really doing a really deep dive into. I'm really interested in that.
I'm curious to see how that goes too. I kind of stopped following it recently, but
I just started. I'm kind of like, that's kind of also the reason I stopped doing the stock analysis videos every single week, because I felt like I was putting a time frame on myself to get those out, and I feel like I shouldn't do that. I feel like I need to put these videos out when I understand the companies on a really high level, and I feel like I really want to buy them. So that's kind of why I stopped doing that, even though my views have definitely gone down. But I think it's for the better over the long term. But that really does interest me, Coinbase. I think that really has a lot of potential here. And analysts have it declining in revenue next year, which I can see why, because of crypto. They're like, is it going to be around? But what if it grows? And at the end of the day, I'm thinking to myself, Coinbase, it's at like, I think 220 right now. It's like a $50 billion market cap. I'm like, in 5 years, is it really realistic that Coinbase is going to be like a $25 billion market cap?
I'm very bullish on crypto long term. I'm very heavy in crypto. I have as much crypto as I do with like my IRA.
Do you?
I love crypto. I study it like crazy. I'm not an expert, but I've studied it like crazy. I trade it sometimes on the side.
Really? I didn't even know that.
Oh, I love it. I'm very heavy in it, and I think it's here to stay. people think this is a crash. I mean, 40% pullbacks is not foreign in the crypto world, and we were just crazy sky high. And again, TA guys, technical analysis. I made a post on Facebook, and I actually still have the photos too. So I can prove this. Back in like March, maybe, I posted a photo of a pattern I saw Bitcoin forming. It was a strong ascending channel, and I pointed out this is going to break eventually downward, and it's going to come down to, I had my levels drawn out. It's going to come down to 44 first, 44K, that range.
I remember
it's always a give or take. It's always a give or take, but that 44K range. And then if that breaks, it's going to go down to 30K was my next level. And it did exactly that. It broke. It went down to, I think, it bounced at 47 first, so I was only a little bit off. And then it came down to 30 exactly. And now it's like it's consolidating around there, and there's another pattern that's forming right now. So it's that's the cool thing about TA, guys. Like, this is another example why trading is not gambling. You're never 112%, but like if you do TA and you know TA, it is kind of like having a crystal ball sometimes. But it's not voodoo if you think about it. It's just, I know I'm digressing here, but if you think about it, all the chart is just supply and demand.
Right.
It's literally just reading supply and demand. So what I say to people is, I know we're talking about crypto, but what I say to people is, trading is as much gambling. If you know what you're doing, if you're using TA, trading is as much gambling as running your own business is. And if you think about it, say you're running a clothing line business or whatever, a painting business, right? When you look at your analytics, when you look at your sales for that month, that quarter, that year, and say sales are up, right, and you've sold out of all your product, you're making this conscious decision to go, okay, sales are up. We sold out of this much product. Now I'm going to re-up. I'm going to add this much more product. I'm going to order 150% more product because the demand is high. Or I'm going to add this new product because the demand is high.
Right.
That's technically a gamble. There's no guarantee there that you order that product and customers continue to still buy it with the same veracity.
Right.
Or that they want the new thing you're launching. But you're taking a very educated guess based on past statistics of supply and demand. You're looking at your company's supply and demand, what products had high supply and demand, high demand, what products had low demand, what products you're left with high supply of, and you're making a guess to your next move to make more money. That's literally all a stock is. What's the supply and demand telling you about that stock? Is there a lot of demand for it? Is the demand going to be long term, or is it going to be short and sweet? Is there no demand for it? And then the chart is just simply your way to read that. The chart is literally telling you, here's what the demand's saying. And so if you learn how to read the charts, it's no more gambling than running your own business. And the proof is in the pudding, because very rarely, I mean, I guess with some aspects of gambling, certain games you can develop a skill for.
Right.
But with a lot of different types of gambling, it's luck. Like, you can't, like, if we shoot dice or we flip a coin, there's no way you're going to be able to guarantee consistency in that. It's luck. So you can't make a consistent living. You can win big enough to retire like once or twice, but you can't be. With trading, you can become consistent, especially with risk management added in there too, and discipline.
Right.
So anyway, I said all that to say that I charted out Bitcoin's crash, saw it coming, saw where it was going to go a while back, and here we are. But I don't think it's done at all. I think that was a nice, awesome, healthy pullback. Even if we chop low like this for a while, for even another year, I think the future is going to be bright for crypto.
That's the thing. People don't understand that. They're like, oh, it crashed 50%. First of all, you're still up hundreds of percent on the year.
Right.
Like, most importantly.
Right. People forget we were like 10 grand last summer.
Yeah. Literally, I looked the other day. It was like around 10 grand.
Yeah.
But on top of that, like, if it keeps going up and up and up, like, with no pullback, it's just going to be an ugly crash.
Yes.
Like, people do not understand that. I don't understand how, but they just think, like, you know, stocks only go up, crypto only goes up, which is absolutely, like, insane. Now, I don't do a lot of TA, which is kind of one of the main reasons I really wanted to bring you on, aside from you kind of like inspiring this whole entrepreneurial, there we go, I can't talk, journey I've really been on. Because I remember talking to you a couple of years ago. I was like, oh, I really want to start a business. I really don't know what I want to do. And you were like, you're going about it the wrong way. Like, you need to do something you're really passionate about, something you're really going to enjoy. So I'm like, I feel like it's fitting now that I'm trying to like innovate and get further down the line. It was only fitting that you came on first. So I was like really excited to have you on. But
that's awesome.
Anyway, the point I'm trying to make here is I don't do a ton of TA, but that's why I wanted to have you on, because I really think stocks, I feel like when you look at TA, you get too caught up in like numbers. And you definitely don't do that because you do some fundamentals. But I feel like you get caught up in a lot of numbers and you're like, all right, it's going to hit here. It can't go any higher than this because of the resistance. It won't go lower than this and support. But the thing is, like, I feel like that's not always reliable. That's just my personal view. I'd much rather, like, I don't look at any charts. I'd much rather understand the company and feel like, all right, I'm paying $20 billion to this stock if you're buying the whole company. And I feel like if you look at it that way and then say the stock goes down, if you liked it at $20 billion and now it's 15, why wouldn't you buy more of it?
Right.
Like, that's kind of the way I look at it.
Right.
Like,
I think TA can always play into that. That's the thing, too. I think people have a habit of looking too zoomed up at TA. You could look at that same way. Like, if you like even if you know, I think it's great to have both. I think it's really important to have fundamentals and TA.
Right.
But, like, just for example, you could look at that stock. If it's been in a very healthy upward trend over the last 15 years, it's been staying loyal to like a certain upward trend line, perhaps. Every major crash or correction, it bounces off that trend line.
Right.
And then say it's been crazy running up high and it suddenly pulls way back, like you just said. You know,
right.
It goes from here to way down. And you're looking and you see that it's hitting that line. It just made a crazy, crazy long wick and like a nice like reversal candles forming. And then you look at other aspects too, like the RSI is way crazy oversold. Right. There's so many different aspects you can look into. Volume's now starting to build up. There's so many different aspects you can look into in this. Perhaps it crosses over whatever moving average lines you have. You add all these different indicators together along with the chart itself. You could literally make an assumption there. Okay, it's been this strong for this long. It's still adhering to this trend line. It's not going below it. And it looks stretched out like it can't go any lower now anyway as it's bouncing off this trend line. Right. Now's a good time to buy. You could do that with just TA alone. And then you put your stop loss, at the bottom of that candle wick if you wanted to. So if it does break that line and you're wrong, then you didn't lose your entire account. You only lost a little bit. Right. But then you mix the fundamentals with that, and then now you have a reason. Okay, well, this also makes sense why this company would do well because of A, B, C, and D fundamentally. Mix that with the TA, and you're like even more set on your decision.
Right. I guess that makes sense when you look at it from that way. I guess I can see the argument of why it's important to have both of them in there. I'm still not going to look at charts, to be perfectly honest with you. But I can definitely see why it's definitely good to have a balance in there, especially if you are into trading. It definitely makes a lot of sense to have some TA in there.
Definitely, yep.
But we've talked about a lot of different investing strategies. I think it's actually kind of cool that we have different strategies because we're giving like a different perspective to everyone. Oh, yeah. What would you say is your favorite? Would you say trading's your favorite? And kind of like why would you say that's your favorite? Or whatever your favorite is, why would you say that?
Trading's definitely my favorite. But like investing's important. Like I'm huge on investing. Right. I have a joint account with Ariana that's mostly dividend and some growth. A little bit of crypto in that. Very minimal with that because I like to be more conservative since it's both of our money. Right. Then I have my side investment account, which is more shorter, higher risk to reward ones, like ones that may not be anything but might be like that, like Neo's in there, Palantir's in there, like those are like that's a more like fun side account basically.
Is AMC in there?
AMC is in there, absolutely. That's my more fun risky account. And then of course I have my Roth IRA. Right. So I have 3 different ones there, and then I trade crypto, but I also invest heavily in crypto, and I have a couple of different wallets in crypto that I treat like an IRA. I just add to them, and I forget about them. So I love investing, but trading, there's something, like I said, when you learn TA, it's like putting together a puzzle. It's really cool when you can go to the charts and you can look at a chart that just looks like madness, looks like the Matrix to most people, and you're seeing a picture come together there. Like it's actually telling you something. Right. There's something really gratifying about that. Right. And then you go in like on weekends overtime and you go and do your charting, you redo your charting, you zoom out to the daily or the weekly chart, look at the big picture, find the macro patterns, zoom into the 4-hour, the 1 hour, the 15-minute, find the smaller patterns within them, look at all the indicators. It's so fun. And then you get a game plan set up basically, and then you wait to execute in that month, the next week. Right. Basically, to summarize everything you just said, if you didn't understand that, he looks at a lot of different charts and he draws a lot of different lines. Basically, I'm an artist. Yeah, basically, he's basically Picasso. But now, so someone out there who wants to get involved with investing, that wants to start trading, investing, whatever route you want to go, I think it's actually a really big problem because we live in a day and age where everything's at your fingertips. Like if I have a question, I can literally Google it right here on this laptop. Yeah. I can Google anything, I can find any answer. But I feel like with investing, combining that with the stress of your own money and not knowing, I feel like it might be hard for someone to learn because I've read tons of books, hundreds of books on investing. But I feel like there's not one book out there that's kind of like, all right, I read this and I feel like I'm confident and I know what I'm doing. I feel like I've taken I've taken piece of advice from this book and that one and this one. I got to piece everything together. But I don't feel like there's anything out there like that. And I think that's a big problem. So anyway, the point I'm trying to make here and the question I'm trying to ask, how would you say someone who's never been involved with it and that wants to get involved with it, where should they go to kind of piece everything together? Well, I can only speak from how I did it, and that was YouTube. There are so many videos on YouTube. And of course you get You get a lot of BS mixed in with YouTube. I can say this for trading. I guess I'll speak on trading and then investing. I think trading is a little bit easier to find good info on because you can focus on just objective fundamentals of trading. It's not so much what stock I like, you should buy this one.
Right.
I want to say this first. I think Josh should probably take this clip and put it right in the front of the video. I can't stress this enough. Trading, 90% of traders lose money because 90% of people don't take the time to educate themselves on how to trade. It is a full-time skill. It is a skill set, like going to school to become a lawyer or a doctor. You need time to learn how to trade. You need to learn the fundamentals of charting, and that's going to take you a long time to understand. You need to spend at least 6 months to a year paper trading with fake money first based on those fundamentals. It's going to take you anywhere from a year to a few years to become profitable. Some people do it in the matter of like 6 months, very rarely. It took me about 8 months to start becoming profitable. But even then, I would start doing just dumb mistakes with not following my own trading plans or staying disciplined to a plan and, erase a lot of my gains.
Right.
So it takes a long time. So the reason is trading is a skill that should take a lot of education and learning, should almost take like a college course and a long time to understand and educate yourself on. But unfortunately, it's something that everyone has access to immediately. Anyone can pick up their phone, open Robinhood, and click buy and sell. And that's dangerous. To me, in my opinion, that's like letting anybody walking off the street into a courtroom and just say, I'm going to take your case. I'm going to be your lawyer today.
Yeah.
Imagine if I walked in, I have no idea about law, and I just decided I was going to take your case and stand up in front of court and try to defend you as a lawyer. I don't know what I'm doing. That's what 90% of traders are doing. It's a real skill. It's not gambling and guessing. You need to understand TA to trade. That said, if you want to learn trading, YouTube things like pattern breakouts, trading pattern breakouts. Another way you can type it in is continuation patterns. So things like ascending and descending wedges, bull flags, symmetrical triangles, things like that. Then also, because they go hand in hand, learn about levels of support and resistance. And they go hand in hand because patterns are all continuation usually. They're either reversal or the continuation, 95% of the time. So when you see a nice pattern forming and it's consolidating, you can be pretty aware of where it needs to be to break out. You can find the next level of resistance and know that if it breaks past that, it's breaking out of the pattern. You can take the trend before the pattern and use that as your measurement for the next level it's going to go. Or you can find more conservative levels, like you just want to trade it up to the top of that pattern once it breaks out, and you can draw your line there. And I know I'm speaking gibberish right now, but and I apologize. I talk to friends all day about this, and I just get caught up. It's exciting stuff to me. I love it. But my point is, levels of support and resistance and pattern breakouts. Learn about those first and foremost. Learn about trading with volume. Learn about stop losses and risk management. Those are your big fundamentals to start with. Okay, then you can move on to your indicators, your moving averages, your simple moving averages, RSI. Look up RSI. That's one of my favorites. And you use all of these together. Like I said, the best way to put it is charting is just a screen telling you what the supply and demand is. You want to know what the supply and demand is for a stock? Here's a screen telling you. There's no one right way to use it. Some people will trade with different strategies. All this amounts to is you just got to find whatever ways you like reading that screen the best. All these things I just listed are going to help you just read what that screen is telling you, and you'll end up finding your own way to do it. So YouTube, all of that. Levels of support and resistance, pattern breakouts. Stay away from opinionated things. Things like, you should trade this stock, or you should trade this stock when it's low or when it's high. Like, those are all opinions, and those will lead you astray. When it comes to investing, I think investing is a lot trickier. I think if you want to be safe, like we said, this is not financial advice. If I want to be safe, and conservative and not do a lot of research, ETFs are phenomenal.
I agree.
What I like doing, what I started doing when I had nothing, I was starting from square one. I didn't know anything. I would start off by researching ETFs. And then I would pick out like some top ranked ETFs, right? And I'd spend a lot of time watching YouTube videos of people breaking down what the ETFs are. Again, stay away from the opinions. We don't want to know if they like the ETF or whatever. We want to know, and maybe they'll include that they like it, but you want to make sure that they're giving you the reasons of what it is. You want to learn what that ETF is, how that ETF works, everything that goes into it, why it might be valuable in the future, et cetera, et cetera, et cetera. And just research all those. And then from there, you can kind of apply the same thing with different stocks. Understand the stock, understand the fundamentals. And I really like looking at, I think it's good to learn basics in chart. Like even if you just learn trends, is the trend going up or is the trend going down over the last 10 years? Something simple like that. Something can have a good fundamental, but if it's been going down for like 10 years straight and there's no real desire for it, it still might be a bad buy.
Yeah, I think all of that is very important. I want to go back to kind of look at it from like a whole perspective for like 1 second. So like if none of that made sense, basically you just need to put in the work and like research it.
Yep.
Because when you build a house, you're not going to start from the roof and then build the floor. Like you start from the ground up. Like you need to build that foundation and look at it as if you were a first grader, right? Mm-hmm. You were given a calculus test. You would have no idea what you're doing unless you're like Jack Ma or some super genius, like some anomaly, but you would have no idea. Like you get to calculus like your senior year in high school after 10 plus years of taking math classes. You just build up to it over time. So if none of that made any sense, then just start with like one thing. Focus on like investing like in stocks, like focus on a business model, or with trading, focus on the RSI, focus on one thing, kind of really start to build off of that, then maybe go into that another, like I can't even talk, go into another indicator, then another one, and then another strategy, and then you can build off of that. Rome wasn't built in a day. At the bottom line. That's
what I do. I would just take notes. I have a whole notebook. And I would just take notes on each individual thing, even if it was really basic, even if I didn't have to understand it. Like you don't have to understand the formula of how the RSI is calculated. You're never going to need that formula. The computer does it for you no matter what. But I was like, well, I'm using it. Let me at least try to understand it. But it's just like doing that with every little thing is going to make you really well aware of everything you're working with. And yeah, he said it best, man. Start from square one and just build from there. Like the best example I think would be like in fitness, because we both came from the gym life.
Right.
In fitness, right? There's a lot to like learn about fitness. Like how do I eat to lose weight, to build muscle? How do I train? Blah, blah, blah. Start from square one. Get away from opinions. Again, opinions of fitness are bad too. Oh, I like this keto diet. Or no, the keto diet's bad. The paleo diet's the way to go. Oh, I don't like squatting. Bad for your knees. All these opinions, right? You're like, who's the correct one to go to? You can mute all of that by just researching what each individual thing is. Okay, what is a calorie? How does a calorie work in the body? Just look up the science, the facts. Okay, calories is a unit of energy. What make up the calories? Okay, these macronutrients, a carb, protein, fat. What is a carbohydrate? What does it do for your body? Okay, I understand that now. How would this benefit me with training? If I'm this type of an athlete, what would carbs do for my body with my sort of working out? You learn each individual thing one by one. Do the same thing with trading. That's why I said basics. Learn patterns, learn levels of support and resistance, learn indicators, and start with that. Learn trends, trend lines, basics. Learn those step by step. Stay with paper trading for at least 6 months to a year.
And what you're going to find is that you're going to find, before I have to stop this because it's about to hit the 30-minute mark. Fun fact, the reason cameras tap out at 30 minutes for tax reasons. That's the reason. Believe it or not. Did you know that?
True. I did know that. The RSI gets overbought.
That's right. Yeah. But the thing is, you're going to find different strategies. Like not everyone's gonna have the same strategy. Like we don't have the same strategy. Everyone's gonna like something different. They're gonna find, some people want to go towards real estate, some people want to go towards stocks, some people want to just start their own business and sell their clothing brand or whatever the case may be. Everyone's gonna have a different niche, like a different attraction. You kind of want to find what you like and what you're good at and kind of build off of that.
Yep.
All right, so getting back towards the business end here before we wrap up, so do you think, looking at like kind of social media businesses, I watched a podcast with Max, and he said it was easier to start one in this day and age. I actually think it might be harder. His reasoning was more so, it's like all the mistakes, all the work's essentially taken out of it. Like you don't have to worry about the camera, you don't have to worry about the tripod, the lights. Like you can literally just Google, how to start a YouTube channel, and like dozens on dozens of videos will come up. I saw his point, but I think it might be harder because it's a little more saturated now. I feel like there's a lot more competition. It's harder to like stand out. Like how do you kind of get past that initial block? And obviously it's like the rich get richer. So once you get off the ground, it might like build up a little bit, but I feel like it's a lot harder to start. And I also feel like people are just very impatient these days, so they just throw it away. But where do you kind of stand on that?
I'm glad you asked me that. Super interesting. I think there's two schools of thought there. There's points to both sides of thinking there heavily. I do agree with, half of me does agree with Max. It is easier to build and grow a following in a business this day and age because now there's structure laid out for you.
Right.
So now, like when you get into, say, YouTube fitness or whatever it may be, there's a structure that you got to follow. It's kind of laid out for you. Like okay, this is the camera most vloggers use. This is the best one. You got to have a catchy thumbnail and a catchy title. You got to kind of border right on the level of clickbait, but not too much clickbait. Like, there's things laid out for you.
Right.
So we didn't have that. When I started in like 2009, there wasn't that. I mean, I was like just shooting in the dark.
Right.
There was no structure, right? So it is easier in that respect. Now there is a structured industry format for everyone to get into, and there's a clear ladder for everyone to just follow and climb, at least to some extent. Even if they branch on their own,
right,
there's that, which there wasn't before, and that is a beautiful thing.
Right.
It's like the music industry. Back in the day, you knew you had to get a demo made, get the demo out to someone who was relevant, get a record deal. Like, you knew there was those steps to take.
Right.
When I got into YouTube Fitness, there was none of that. So he is right with that. Also, more saturation is bad, but it does also mean more potential eyes on you too. Got to remember that. Like we said, when I was starting off, 33,000 subs was huge because there just wasn't a lot of people to watch you. And because of that, to achieve 100,000 consumers buying your products was like impossible. They weren't there.
Yeah.
Now, yes, it's harder to climb up through that mess of people. It's going to be way harder. But if you can make it up to that mess of people, you now have hundreds of thousands or millions of more people available to support you and buy your product than ever before.
That's very true.
So on that side of it, it is easier. So to sum it up, there's more structure laid out for you just to follow. You can follow the people before you. And if you do make it to the top, there's more people available to actually support you and watch you.
Right.
Now, on the other side of it, though, it is also at the same time harder to have started back when I started to some extent, basically because of the opposite of all that. You're starting off in an industry that is not an industry. Right. So one, there's nobody there watching you already. Like, there's no one tuning in to see, again, music. Everyone's watching music videos and listening to music and whatever the latest on Spotify is. So if all new artist has to do is get on there, and they're probably going to find him. Right. But if music wasn't a thing, if no one was listening to any music, it was a foreign concept, an artist could put out an album, there's no one there to listen to it. Exactly. So that's how it was with YouTube. It wasn't a thing. So first off, it was like it wasn't scary to me because I just loved it and I lived in the moment. Right. Like, if you're trying to think ahead, it was scarier because you're like, where do you go with this? Like, do I make a website? What do you do? How do you do business stuff?
Right. I'd imagine that led to like a lot of self-doubt, which we're going to talk about in a second, but a lot of self-doubt because it's not like today where it's like, all right, let me start a YouTube channel. I can see where the ceiling is. Like, I don't know where the floor is, but I can see where the ceiling is. But back then it's like, is this even going to go anywhere?
Right, right. So there's no structure to follow, so you don't know what the hell you're doing. And then there's less people in general. So it's like, even if you do get on, it's like, how big is that consumer base even going to be at that time? Because it's such an underground niche. And then to flip-flop really quick, you could also argue that makes it a little easier to get on too, because the industry's so small. Like, back then, anybody could start a YouTube channel and make it. Like, I remember guys, I never name drop, but I remember guys that, I mean, I barely had any business being in the industry because my genetics suck, but I remember guys that had no business. Like, they should not have been on camera. Right. But they got good followings just because there's only like 5 of us to watch. Right. So people watch them. But as soon as YouTube Fitness started picking up as a trend, and the Max Tunings and Chris Joneses and like other channels started coming along, once it started catching on, those guys disappeared in a heartbeat. Right. So it's a little easier to get seen kind of when there's no one there. But again, it's like, if they're letting anybody in the door, as soon as there is a structure building with a door, they're out.
Right, exactly. Now, kind of going back to like the ground up, because I'm sure someone's watching this who's kind of maybe started a side hustle or a business, and they're just like, what am I doing with my time? Yeah. What advice would you give to them? And how do you kind of work through that self-doubt, those days where it's like, what am I doing? Like, should I just go get a job? Like, I need to put bread on the table. Like, I got to feed myself. Never mind a family. But like, what advice would you give to someone in those two situations?
Hey, that happens all the time, by the way. Even nowadays, that never goes away. That fear, you can be killing it with income, but it's just how it goes. We're supporting ourselves, so there's always going to be that fear sneaking in there. I think that the important things to do is, first and foremost, I'll say this. First and foremost, you should be focused on your passion. First and foremost. That is rule number 1. So you should not be getting into YouTube or whatever it is, even if it's not YouTube. Any business, you should not be getting into it just for money or just because you think there's a potential to make money. It should be because you're passionate about something, and then the business end of that is secondary. So in my example, I was passionate about bodybuilding first and foremost. That's all I cared about. That was my obsession. I didn't care about YouTube views. I didn't care about money. And then I decided to share my bodybuilding obsession with YouTube, and then came the views and money. But there'd be times, though, because I did YouTube for 12 years, there'd be times where the passion for bodybuilding or fitness would wane a little bit, and I'd start looking at YouTube as just a 9 to 5 to clock into, and I'd be focused on just the views and the money.
Right.
And it got miserable. I got very scared. I got very stressed. I started hating, almost becoming bitter towards YouTube because it became a stress thing over my head.
Right.
So the first thing is be focused on the passion. But that said, even when you're focused on the passion, you're still going to have times where you definitely doubt yourself and it gets scary a lot. What I like to do anyway is I step back for a second and I kind of let myself go down that rabbit hole of doubt. I think to myself, okay, what are you afraid of right now? You're afraid of having to get a new job. Okay, you're afraid of going broke. You're afraid of not having this income anymore, losing it. You're going to have to wrap it up, suck up your pride, get a job again or something like that. All right, what's the worst that actually happens? Are you about to lose the house? No. Okay. Do you have a savings account still? Yeah. Even if it's small, even if you put everything you had into something and your savings account is barely there, do you at least have enough coming in just to cover this next month's expense? And I've been there too. I've been just like, I have just enough to cover this next month's expense, and I'm just down to scraps again. You realize all that. Okay, that gives you a second to pause and be like, all right, I'm not going to die. I'm still okay. I have time. I'm not suffocating against the clock just yet. I have time. Then you can think to yourself, all right, so if you really are this afraid and you want to go get a job, then just go get a job. That's what I tell myself. I'm like, just go do it, then go get a job. And that kind of like shakes the fear out of me for a second, the panic, and I'll be like, well, I guess I don't really need to get a job. Why would I want to do that? I don't want to get a job. I actually enjoy doing this. It kind of reminds me for a second, when you kind of surrender to it for a second, as funny as it sounds, because the whole time you're sitting there worried about the money, and failing. You're worried about that. That's where your head's at. So you're thinking of you're just thinking of the money. That's why you're like panicking. This isn't generating enough money. What if it doesn't? I need to get a job. You're just thinking about the money. So if you stop for a second, you're like, all right, well, I'm covered for the moment. I'm covered for this month. I guess I can go get a job then. If I'm really this worried, why don't I just man up and go get the job like I keep complaining about? And then you think about it, and then I usually land on something like, well, I don't actually have to get a job yet. I'm not that point yet, and I don't want to get a job. When I think about that, when I get rid of that panic from the money and I'm just thinking about what I'm going to do, I'm like, no, I like doing this too much. Even if it's like not making bank yet, I like what I'm doing too much. It kind of snaps me out of it and shows clarity again. It kind of helps bring me back down to earth and remind myself why I'm doing what I'm doing, and it should be that you love what you're doing.
Right. I think that's so important. And this happens to all of us. Like, it happens to me. Nick's always said it's happened to him. But I think the important thing to remember here is kind of, if you're worried about money, money can come back.
Yes.
Like, worried about assets. Assets can come back. There will be another Tesla one day. There will be another AMC one day. There will be, another, but there might not be that opportunity one day that you're chasing right now. You can't get your time back at the end of the day.
Right.
So I personally think it's better to kind of go all in now while you have that unique opportunity, if you have that unique opportunity, and say, what's the worst that could happen? We'll figure it out. As opposed to living every day after that thinking, all right, what would have happened if I really went all in? I really gave this my all, and I really, really tried and put that forward. So I really push people to do that. Like, I have a friend who started a podcast. I have another friend who started a YouTube channel. I'm like, dude, just do it. If you like doing it, the possibilities are endless. Like, the sky is the limit. Absolutely.
Yep.
And the last thing I want to ask before we wrap up here is complacency. I want to talk about that. So I think complacency kills everything.
Absolutely.
I can definitely kill everything. It doesn't matter if you're an athlete. It doesn't matter if you're a YouTuber. I think that can kill everything. And I see some of these guys on YouTube, like some guys start months after I did. Like, I'm talking like 6 months. They've got like 100,000 subscribers. So like, I don't think like these guys will get complacent, but some of them, I'm sure there's some out there that will. They got like 100,000 subscribers in like, a few months, and they might be really good now. They might be really well off now, but what happens when that starts to slow? What happens when they can't innovate?
Right.
Like, do they really start going down that rabbit hole and really start to get frustrated and end up like stopping? But how have you dealt with complacency, or how have you seen someone deal with complacency, and how can you kind of see when someone's really starting to get super complacent?
Yeah, I have definitely been guilty of complacency. Huge. In 2015 and 16, I started breaking it big with YouTube. Like I said, I quit my job in 2012. Was kind of making scraps from YouTube, but I took that plunge and just stayed focused on my passion. And finally built it up to something great, and I got my first six-figure year, I think, in 2015 from like all the YouTube stuff, which was like awesome. I was head over heels.
Right.
And I was young. I was 24 or 25 at that point. And bought my house and stuff like that, but definitely got complacent. Like, I felt like I was at the top of everything. I was collabing with all my friends, Max, Christian, and all that. I was the OG at that time, and I finally had a lot of money for the first time in my life. And I just stopped. I stopped working. I stopped becoming innovative. I just make basic, boring ass videos of really no passion, just robotically lifting or something like that, just because it's what I had to do. That's what the channel content was. You
Right.
know, it felt like clocking into a job, basically. I was like, I got a lot of money. I'm good. The next thing I know, we're buying a house. I'm going out to eat 3 times a week. I'm spending. And suddenly it hits me and I'm like, oh my God, where did all my money go? And then it's like, oh my God, where all my views go? So then I was like, I need to snap out of this. And then I started I was like, I need to break out of my comfort zone. And I started just really shifting back into gear again and busting my ass again and making like real content, doing like the cut for the photo shoot in 2018.
Right.
But then I got hit with the dose of reality. I was like, my views are not coming back, even though this series is going on. Like, what the hell? And complacency totally wiped out my views. It killed my channel, along with just age too. You know, you can only have a YouTube channel for so long. Complacency totally wiped that out, and it's violent, man. So I snapped out of all that, and then what was interesting is I felt it coming back again a little bit. I was my channel views have just gone way down. I've had the channel for 12 years. It's to be expected. I'm okay with that.
Right.
They were going way down, and I was still actually making really good money from it.
Yeah.
Yeah. Like even with these low views, just from between business and sponsors, I was making still like surprisingly good money off of YouTube. Way more than you expect from those views. Not from YouTube views directly anymore. The AdSense was like down to nothing. But
Right.
It was cool. But I had a huge realization. I hated it. Every time I'd upload and I'd see no views, I'd be like, I can't wait to quit YouTube one day. I can't wait to retire.
Right.
I hate this. And I started to get bitter because I felt like I was pushing and treading water and failing. And then, of course, it sealed the deal when I tore my pec. Because I always told myself, like, when my body finally fights back, I'm going to back off on these 3 times body weight lifts and stuff like that. Because I don't want to be 60 years old and, like, crippled and in pain. And, like, really, the risk to reward is not there anymore. If I'm not even getting views for this stuff, like, and I'm not in love with it anymore. And I'd hit all my major goals in lifting anyway. I did pursue that to the fullest. I'm very proud of what I achieved in lifting. I've achieved everything I wanted.
Right.
I retired very proud with that. I want to say that. I'm very happy with that. But at this point, I was like, ugh. And initially, I was getting really down and depressed and stressed. And I went on a long walk with Ariana. And she helped me see really clearly that I was going. She didn't tell me this. I was venting to her. And by venting to her, I realized what I was saying. I kept going back to the fitness thing, the YouTube thing, because it was a comfort zone.
Right.
She kept saying how I love trading. She saw it. She's like, you're obsessed with trading. You love it. You do it every day. But anytime things went south, which they will when you're new to trading,
right.
You know, I'd escape. I'd get away from the computer and go back to the gym, or I'd use the gym as an excuse to cut it early or not study or whatever. Right. I'd be straddling one foot in the door, one foot in that door. And it was really holding me back mentally, I realized, too. Because it takes balls to take a leap of faith into something like that. And I wasn't letting myself take that plunge all the way. I was too close to the vest, which was affecting my performance in trading too.
Right.
And I realized that I kept running back to the gym and YouTube, even though I was hating it. And so we discussed that, and I was like, yeah, I'll probably try to back off on the YouTube and stuff like that, but I'm not gonna like stop lifting because, like, you know, I gotta lift. I love lifting.
Right.
Whatever. And she didn't say anything because she'll never try to tell me what to do. She was just like, okay, he'll figure it out.
Yeah.
But she knew. She told me afterwards. She knew that like I needed to stop lifting too for a little bit. So anyway, I was in the gym. This was March 5th. This was 3 months ago. 3 months ago, I was in the gym squatting, and I was just like, I hate this. I stared at the set. And I was like, I hate this. This feels like shit physically. Part of it was because my body was recovering from the pec tear and stuff.
Right.
And I knew that was temporary, but I was like, I hate this. I was like, this is not fun anymore. Like, I don't have any goal. I don't have any desire to chase. Like, I hit like 1 million PRs in 2020 anyway.
Right.
I did not have a desire to chase anymore at that moment. I was really like in love with the trading, trying to dedicate full time to that. I was in there. I was like, you are just doing this because you feel like you need to hit another PR so you can document it and get a new YouTube video out just to plug another sponsor or something like that.
Right.
I was like, this is like clocking into a 9-to-5 job.
Yeah.
So I unracked everything right there. I left the gym, and I did not go back to the gym at all. And then the funniest thing is, for 3 months, I did not miss the gym.
Really?
I did some little at-home workouts because I'm very big on health. I want to stay active.
Right.
So I don't want to become unhealthy. So I still do at-home workouts, stay active, but didn't go back to the gym. Did not miss it. Still don't miss it at all for 3 months. And with that, I also decided to make that big finale YouTube video, the thank you for 12 years on YouTube, basically saying goodbye to YouTube. And it was the best feeling. And what's funny is, this is going back to what we were just talking about. When I was making that YouTube video, I put a clip in from 2012, which was 9 years ago now, from 2012, where I was talking about how I just quit the 9-to-5 world. And I was going to take the leap of faith and move over to Virginia, 500 miles away from where I lived, and start focusing on NWB. And basically, I was going from, you know, a $55K plus commission salary plus benefits at only 20 years old. That's good at 20 years old. I think I just turned 21. And I quit that to basically make $600 to $1,100 a month.
Right.
And just basically live off savings, basically. It was nothing. But it was a big leap of faith, and it was do or die for me, and it was something I loved, and it worked. And I had an epiphany when I edited that video. I was like, oh my God, YouTube fitness has become that 9 to 5.
Deja vu.
Yeah, it really, really, that's become your 9 to 5. And I'm new at trading, so I'm not making a killing yet. I had a great week this week, actually, but I'm not making a killing yet.
Right.
But I am making progress, which is, if I wasn't making any progress and still spinning my wheels, then okay, maybe it's not for me. Right. But I've been making nice progress, and I'm very optimistic, and I love it more than anything. And I realized, I was like, yo, this is what you need to do. So you have your savings, you have your investments, still have passive income coming in from NWB side of things. It's not all, it's going to dwindle down, obviously, more and more. It's still some coming in. But I was like, all right, this is what we need to do. I need to become a little responsible with my budgeting for a while. Right. And we need to take this plunge. That's when I function the best, when it's do or die for me. Right. As long as I'm being meticulous. I'm not just like throwing it to the wind. Right. But I was like, all right, I have savings. I have my investments already in place. And I've made progress. I'm not brand new to trading. I've already got the wheels turning. And I hate this. This is what I need to do. NWB's become my 9 to 5. I've become complacent. And the desire to go back, man, I had emails from sponsors trying to book more like 4-digit deals like per video or per post with me. Like, things that would be awesome extra income. And I made myself say no to them just because I didn't want to sit there. And I knew even if I let myself just do, okay, I shut down YouTube, but I can still work on Instagram with you. Even if I did that, I'd still be keeping a foot in the door there. I need to be all into this. So anyway, I say all that to say I was getting complacent with NWB and YouTube for sure. And even though I was making good money, mentally, huge comfort zone, mentally was not happy. I've been more happy, even though I'm in so much more uncertainty, I've been more happy in these 3 months than I've been in such a long time.
That's awesome. And I think that's so important to continue to essentially replace yourself because once you get complacent, once you get comfortable, that's where I think the danger can really start to set in. Because when things go south, how do you respond? If you don't know how to respond, then that can definitely be dangerous. And that's kind of like why I wanted to start this, because I'm like, all right, I've got the YouTube channel going. Like that's making, I guess, we'll say decent progress. Like I feel like it's going to really start to pick up once it really starts to get off the ground.
Oh, hell yeah.
But I'm like, what else can I do? I'm like, why not a podcast? It's fun. You know, it doesn't require a ton of prep. It doesn't require a ton of work. I'll meet a ton of new people. Yeah. I'll continue to go out there. But still, like that doubt, like was still there. Like even like when you were driving here, I'm like, do I really want to do this? Like and I told you, like when you got here, I'm like, dude, I'm like kind of nervous. Like it's going to kind of be a little awkward the first one. But it happens. And no one feels comfortable doing that. And I was telling Abby this the other day. I was like, I feel like most people just don't push themselves because they want to stay in their comfort zone. And I think that's what holds like a lot of society back. And I think that's so important. I'm like, what's the worst that could happen? I come and talk to a mic with one of my friends for a couple of hours, and then I just post it online and no one watches it. And then I just go back to, working in that back corner over there. Like, that's literally the worst that could happen. Like, so I'm like, and I waste like, $100 on a microphone or whatever. Like literally nothing bad can come out of it at all.
That comes back to what I said about it should always be your passion first. Right. Remember that, because I know what you're talking about. That's a very familiar feeling. You feel like you're putting all this work into it, and you're like, is this even worth it? I feel so stupid or whatever. Or you feel nervous or anxious. And it always comes back to that. Just remind yourself that you're currently doing something that you love. It's something fun that you're excited about. So why not put all the effort into it?
Exactly.
Forget what it yields or doesn't yield monetarily or view-wise.
That's what I try to tell myself. That's what Abby tells me. She's like, just keep doing it. Like you like doing it, like because I like combining finance and filmmaking because I don't see a ton of people doing that. You don't see a ton of people like jumping over houses or having like
that was cool. That was cool.
That was actually really easy to do. Cool like, but yeah, I'm like, let me put that right in the front. But like, not like a lot of people like don't do that. So I'm like, it's something I enjoy doing. I've always, even when I was in high school, I always enjoyed multimedia. So I'm like, let's just keep doing it and let's just see where it goes over time.
Oh yeah.
So, any new ventures you want to tell us about before we wrap up here?
Nothing right now, man. Like I said, we retired from NWB finally, and been full force on trading. And I'm still new in the grand scheme. Like I said, we got the gears moving, but still always learning. And I'm still new in the grand scheme. Only a little bit over a year in now, but I love it. Something I love to do. I wouldn't want to do anything else right now. Right. And so right now, my one and only focus is just working on mastering that full time.
Last question here. Will we see a trading channel from the Nick Wright one day?
Man, I would love to, just because I love being on camera and I love interacting. And I think, like I said, I'm passionate about trading and the TA side of it. And it's a skill set most people aren't even aware of that exists. So I do love the idea of doing that. But I want to make sure I build something for myself first. I want to feel like I'm in a position where I'm worthy of doing a trading channel. Yeah. I don't want to, like I said, I make money here and there. I had a great week this week.
Right.
But, you know, I'm still like, I have a calendar where I track my behavior, my psychology.
Right.
I'll give smiley faces, green smiley faces if I made money, but I did not stick to a plan. Like I didn't let a trade run to my goal. So we made money, so it's green, but it's a sad face or whatever. So green sad face if I didn't follow the plan. Green check if I followed the plan, it was green. You know, red X if it was bad. But it's just to track behavior. So it's like, there's so many moving parts to this I'm trying to master and stuff like that. So I think once we get there, I'll know it. When it feels right, or I've amassed a certain amount from trading, like year to date, then yeah, I would love to do something like that.
Yeah, that'd be awesome.
That'd be cool. I think that'd be really cool.
Well, thanks so much for coming on, man. Where can people find you if they want to see, if they don't know you?
So I'm still active on Instagram. So at Instagram, oh my God, I never give up my Instagram. I'm always like youtube.com at Nick Wright NWB. Nick Wright, NWB, all one word.
All his stuff will be linked down below. Thanks for watching, guys. Thanks for listening. Like, comment, subscribe as always, and we will see you guys in the next one.